What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. It's time to celebrate because the weekend is here. And that also means the FAANG Stock Recap Show is here as well, where every Friday we recap all the major news and the technical chart patterns of the week. And this is an important week because we finally saw these FAANG stocks start to roll over a little bit from a price perspective. So when we get into the technical segment of the show, I'm going to give you specific areas where I will actually be buying the dip this time on all of these stocks. You'll definitely want to hang around for all those price levels. But before we get to that, we've got to get to the news, and we start things off like we always do with Meta Platforms. Start of the week, like a lot of these stocks, much higher, closer to $180 per share, down 6.75%, closer to $168 per share. Now, we've talked about this, I think, for 2 weeks in a row, that the FTC is moving to block Meta's within purchase. This is a micro cap $400 million acquisition that Meta made to bolster up their Oculus platform. It's a fitness app on there, probably one of the leading fitness apps, but certainly a niche product when it comes to not only fitness apps, but virtual reality fitness. Well, the FTC is deciding to block that. We have a December 20th date. Both sides have until November 21st. Should be about 5 days of arguments. We should get some results likely by the first of the year on this one. I tell you what, I am not a lawyer, but I would be shocked. I would be absolutely shocked. Even the wacko judges that you have out here in California, I would be shocked if they block this move. And quite frankly, if this move is blocked, it just creates a log jam from a regulatory perspective. You will not be seeing a lot of acquisitions if something like that can be blocked by the FTC. Now, Meta Platforms rolling out a stars payment feature on Reels. This is to more creators. They were beta testing this likely with high follower counts or high visibility accounts in the past. This is going to be rolled out, I believe, to just about anybody with over 1,000 followers in certain geographic regions, among other requirements. But what it's going to allow you to do, I have some, a little bit on the screen here, where they're going to allow you to tip creators. So creators that have this feature enabled on their Instagram account, you're going to be able to tip similar to how you can do here on YouTube. You're going to be able to get a percentage of the ad revenue. You're also going to be able to interact with your fans in a little bit easier and better ways. I love this from Meta. They've got to innovate their way out of their stalling and falling revenue, which we'll talk about here in a second. And this is one way to do that. Now, it's going to mix up the economics a little bit. Look, for the course of Instagram and Facebook, they've been basically getting all the content almost for free, people freely posting it. Now they're actually having to incentivize it, but it certainly has worked out tremendously here on YouTube for creators, and I think the same will apply for Meta when it comes to Reels. Now, Meta Platforms slipped earlier this week as Morgan Stanley lowered their 2023 earnings estimates on falling engagement and rising headwinds from competition and also the online advertising space. So what it wanted to make me do is bring up the earnings estimates. These are constantly revised at these different companies, and we see that Meta for the third quarter is expecting about $27.7 billion worth of revenue. In fact, the high-end estimate on Wall Street is at $31 billion. Now, most of you have been following this channel for a long time, realize there is significance behind this $27 billion number. Facebook has not been able to put up a quarter outside of the fourth quarter, which tends to be boosted up by fourth quarter ad buying by a lot of different types of advertisers. They have not been able to put up a $29 billion revenue quarter since the iOS changes. We're probably not going to get that in Q3, and we're probably not going to get it in Q1 of next year. Analysts not anticipating that until Q2 of next year, where you top $31 billion. But you're actually going to go negative on the growth over at Meta for the next 2 quarters, and then you grow to kind of a low to mid-single digit in the first part of 2023. Obviously, if Meta can overachieve, this stock is priced in a lot of downside. If they can overachieve on this revenue side, the stock will likely go up. If they underachieve, well, you probably know what direction Meta is going to keep going. Meta and Apple fought. Now, this was actually came across after we recorded our show last week, so this was dating back to last Friday, but this was an interesting news news story, and it said that Meta and Apple actually considered partnering. So this was an app that Apple tried to float to Facebook that basically allowed Apple to skim off the top a little bit of Facebook. Now, I don't blame Facebook for not considering or not going forward with this partnership, essentially allowing Apple to kind of skim off the top of your app sales and different types of subscription models that Apple was promoting to Facebook, that maybe they should have a paid app that was ad-free and then maybe offered a little bit more privacy, and then Apple would take a small cut and then Facebook would take a cut of the rest of the revenue. Certainly looking back, it would have maybe been a little less headaches for Meta, but I actually like this move from Meta. I respect that Apple actually approached them with this, and I respect even more so that Apple really laid the hammer down when they decided not to partner them. Now, speaking of Apple, start of the week at 172. This one basically flat, end of the week closer to 171.50. Now, we are on the basically iPhone 14 eve here. We are looking at, this is a rumor, potentially a September 7th launch for the iPhone 14, and these are expected to maybe be in stores and in consumers' hands by as early as September 16th. That is less than 30 days away. We get a new iPhone. The lineup is expected to be about 4 different models, very similar to what we've seen in the past. It probably will be a slightly bigger step up than what we saw last year with the iPhone 13. We're expecting 3 new Apple Watches and then maybe some new Macintosh computers and iPads as well. We'll closely follow this. My guess is we'll get confirmation likely next week when this event is. Now, Apple is seeing slight supply chain improvement with their iPhone 14. Like the previous news story said, there are some rumors that we are less than 30 days away from you actually being able to take delivery of this. So certainly they are being manufactured and they are on the process of being probably airshipped over here to the United States. Now, Apple reportedly in talks to produce watches, MacBooks in Vietnam for the very first time. This would take some of Apple's supply chain outside of the country of China for the first time. This is great news. I think if you are an Apple shareholder, you want them to diversify. Now, are the margins going to be the same? You would assume probably the quality of the product relatively similar. It's possible that the margins, the gross margins, the net margins on these products may be slightly reduced, but in the economic environment that we are in now, this is exactly what you want your companies doing. Because again, if China shuts down for any number of different reasons, and we've seen shutdowns this week in China due to power outages or power conservation. We've obviously seen it over the past year or two based on COVID-19, and there's obviously that geopolitical risk that is always overhanging China as well. That would absolutely shut down Apple's business in a heartbeat. You like for them to diversify into other countries like Vietnam. Now, Apple slipped this week after reportedly laying off over 100 recruiters amid an economic slowdown. This is actually pretty rare, the fact that they have these contract kind of third-party recruiters that are responsible for finding new applicants and onboarding certain high-value talent. The fact that Apple is laying off 100 of them, my guess is what you're seeing over in Silicon Valley is, look, the people that have these jobs at Apple and Microsoft and Amazon and Facebook and all these different companies, the people that work there clearly are not stupid, okay? They understand the economic times that we're in, and so you're probably seeing slightly less churn. So those people that may have left, certainly during the pandemic, if you wanted to leave this company, start your own startup, you probably would have left. If you weren't happy with the work environment, you probably would have left by now. What Apple and most of these tech companies are left with are the employees that really want to work there. And so I think that could be the case with Apple. Now, Apple is likely to include advertising in their Maps, TV, and books products very soon to help boost revenue. So this is very interesting. They basically turned Facebook's ad business into a negative grower from a revenue perspective, at least flat on a year-over-year perspective, and Apple's just going to move right in and start advertising. This is exactly what you want, though, over at Apple. They're spending tons of money on this TV content. They're obviously will talk extensively about sports rights that they're getting and likely to acquire. My guess is they're probably going to get those very exclusive NFL rights, not for this season, but next season. And so they're going to have to continue to layer on advertising. If there's any company that can scale up an advertising business to be multi-billions of dollars, I think it's Apple, and I don't think that is priced into the stock. Moving on to Amazon, started the week at 143, ended down about 3.33% to $138 per share. This is after Qualcomm is reportedly re-entering the server market, and they're inviting Amazon. It's always good when a company has a new product and they're inviting you to come see it. That means pricing is probably going to be really good, because if you could just sell your product, no problem, well, look, you're probably going to have to force people to pay up. But the fact that Qualcomm is inviting Amazon, like they're literally having Amazon come and take a look at these server products, that's good for Amazon. And we've talked about it here on the show. We'll certainly talk about it when we get to the Nvidia segment. But you look at AMD, Intel, all the chip makers out there have been seeing their stocks take a hit because it appears that demand is starting to wane. There's a lot of supply in the market. Now, that's obviously bearish for the chip makers. And I've got another story here. Amazon is technically a chip maker. A chip designer is probably a more proper term, but this very lower chip prices and higher supply very much benefits the Amazons, the Microsofts, the Googles, the certainly Meta as well. The companies that are building out this server space, if all of a sudden there's tons of entrants into this server environment, what's that going to do to margins at Intel, at Nvidia, at AMD? It's going to push those margins down, ultimately good for Amazon. Now, more server or chip news for Amazon. Their new chip supposedly should boost AWS competitiveness growth. This is according to analysts. So they've got a new server chip. They're going to roll this out to AWS. Obviously, Amazon has a dominant position there. And if they continue to invest in the technology, proprietary technology, okay, they're not just pulling off the shelf chips and running it through their servers. They're actually developing their own, certainly can give Amazon a competitive advantage. Now, Amazon also, speaking of those sports rights, Amazon a major player there as well. They've got exclusive Thursday night football. So in the past, that Thursday night game, I think, was simulcast either on the NFL Network or CBS or both. You didn't have to log into Amazon to view it. Now, this year, starting this year, you have to have Amazon. And I don't know if they're going to require you to have Amazon Prime or what. My guess is, I hope from a shareholder perspective, they make you have Prime to view this Thursday night football game. But this is going to be included in the Nielsen weekly TV ratings, which is the first for a streaming event. Moving on to Netflix, start of the week at 250. Like all these stocks, ended down about 3.8% to $241 per share. Netflix is set to block downloads on their no-frills ad-supported version that is expected to come either later this year or early next year. This is according to source code that people are viewing. You're not going to be able to skip the ads, which is typical on any type of streamer. You're also not going to be able to download the content, which makes a lot of sense. But it looks like Netflix is going to go down kind of the traditional ad-supported streaming video, similar to a Hulu, or certainly similar to what you see here on YouTube if you don't have the premium version. Moving on to Nvidia, start of the week at 189. This one down big, over 5.5%, down to $178 per share. We have earnings this week ahead for Nvidia, Zoom Video, Peloton, Macy's, Salesforce, Dollar General, and more. We'll do some videos on most of these companies. We'll probably touch on Nvidia again, although they pre-announced, if you recall, it was either last week or the week before, Nvidia pre-announced their earnings. They were dismal, okay, and they also gave guidance that was pretty dismal as well. We'll be looking for an update from Nvidia. Anything that is revised more to the downside, I think you've got an opportunity to buy Nvidia maybe as soon as next week. We'll talk about that from a technical perspective here in a moment. And now, could another cut from Nvidia drive a necessary reset at the chip giant? So a lot of analysts are speculating, look, you've got a $470 billion company, and they just put up revenue between $6 and $6.5 billion. You annualize a number like that out, and you're getting to an astronomical price to sales. From a price to earnings basis, you're paying over 50 times on this one. So if Nvidia can't convince investors that they're going to be able to reaccelerate their revenue, reaccelerate profits heading into next year, this stock is likely very much overvalued and probably coming down further. Doesn't necessarily mean it's a stock that I would sell, or certainly I wouldn't go short this stock, but it could create buying opportunities as longer term. I think we still have a lot of faith in Nvidia. Now, Advanced Micro Devices, relating to the competition at Nvidia, they're set to unveil their new CPU on August 29th. We'll see how the market reacts when that products come to market. Moving on to Google, started the week at 121, ended the week down 3.75%, down to closer to $117 per share. This is after YouTube named a Verizon veteran to lead partnerships here on the platform. You can call me anytime you want, Verizon veteran. We'll have a discussion about partnerships here on YouTube. Now, also more YouTube news. They're eyeing a channel store. Now, this also came out late last week on Friday. I thought this was interesting. So inside your YouTube account, potentially in the future, maybe you could get a roll up a subscription into Netflix, HBO, Hulu. I was thinking about this the other day. There's all these streaming platforms out there. It'd be really interesting if I could just pay one price and get access to all of them. I think that's the future at some point, and I actually like YouTube's idea. Whether or not that's great for the creators here on the platform for YouTube, where you log into YouTube to view one of my videos, but then now you can watch Netflix, HBO. Look, personally, I don't really care, but I think there's some creators here on YouTube that might push back against this type of idea. But from an investor perspective and just a unique offering perspective, I actually think Google could roll all of these streaming platforms all into one, and that actually would be a very unique product in this marketplace. Moving on to Microsoft, started the week at 291, end of the week just down a little bit, down about 2%, down to about 200. I'm seeing in the after hours closer to 285, 286 we'll call it, over at Microsoft. Now, video game sales, look, they peaked in 2020, and they peaked a little bit in 2021, and they've been falling ever since there. They fell again in July, but they start tracking back to that 2020 levels. Now, I have a PS5. I play my kids are really young. My oldest is 5. So I don't play a lot of video games with them. They're still a little young for that, but I've done enough research in this sector that there is some strong games on tap in the pipeline, probably more looking out into next year. You certainly have a Grand Theft Auto refresh that I think is anticipated sometime maybe as early as next year. That certainly will spur on a lot of video game demand. Now, speaking of demand, we talking about Tesla. Started the week at 917, ended down about 3% to about $890 per share over at Tesla. Now, Tesla opened 48 new supercharger stations in mainland China. Folks, there's only 30 days in a month. They're expanding this so rapidly. And look, if you don't own a Tesla, or if you live in kind of a rural environment, or you don't live out here in California, or one of the markets where Tesla has a very dominant, Tesla, I think, is the #1 selling car across all brands, I believe, out here in California. I could be mistaken on that, but they're very much towards the, look, everywhere you drive, you see Teslas out here in California. And the reason why I talk about that is because not everybody's aware that the supercharger network is actually one part of the competitive moat around Tesla. Because trust me, if you have, certainly if you don't have access to a Tesla supercharger, you're driving your Tesla around, you're trying to find a place to charge it. If there's not a supercharger around, you're in trouble, okay? And I can't imagine if you drove a Ford EV or any of these other brands, if you weren't charging that thing at home, it might be kind of hard to charge it, okay? There's certainly parking garages, certain public buildings that have access to that, but not to the degree of Tesla. And now the next story relates to that as well. Tesla is closer to opening up their supercharger network, which I think is great for shareholders. They're going to open up these superchargers to other EV brands very shortly. I saw that it was a 99-cent per month subscription, and it got you a slightly less like kilowatt hour price that you had to pay, or you simply paid as you go to get access to superchargers. I think, look, this is never going to be like a mega high margin business, but it's going to be enough margin, and these are going to be the new gas stations, okay? Certainly not in every market around the world, certainly not in every market here in the United States, but out here in California, look, they're going to force you to buy an electric vehicle here in the next 10 years, which we could argue if that's a good policy or not. Certainly we could have that argument. This is the investor channel. And from an investor perspective, these superchargers, the fact that Tesla already has this network in place, very, very bullish for that revenue coming up. Now, more great news out of China as Tesla slashed their Model Y delivery times to a minimum of 4 weeks. I think these were closer to 8 to 24 weeks for the Model Y. The fact that you're only going to have to wait 4 weeks to get one of these cars in China, they are pumping these out. I tell you what, it goes without saying that China is just a fantastic country from a manufacturing perspective, and Tesla's ability to pump these cars out in this environment, just illustration of that. Now, finally, a little bit of Elon Musk news. He joked on Twitter this week about buying Manchester United, which is really odd. Nobody knows if he was actually talking about the actual soccer club, which you can. It's actually a publicly invested company. Its ticker symbol is Man U. Currently, the share price is about $13.85. It's a $2.27 billion company. Certainly, even with a modest premium, 50, 60, 70%, that's a drop in the bucket to Elon Musk wealth. I don't know if he's interested in buying the soccer club, but certainly he tweeted it out this week. Now, moving over to the technical segment of the show, we're looking at the SP 500. It looks like to me we might be completing kind of another set of lower highs, and then we're potentially maybe heading lower in the markets in the coming weeks ahead. Now, I'm excited. That's what I'm excited about. I am actually excited for this. Look, if you're close to retirement or you're trying to buy a house with the money you have in the market, I think you're doing different things in your money than investing in the SPY. I would guess the vast majority of you are trying to buy stocks now and then maybe potentially sell them down the road, 10, 15, 20, 30 years down the road. You want big red candles to show up. This is the first sign that we had. Certainly from a technical perspective, this looks tremendously overbought, and you'd expect this to come down. First stop on SPY is probably about 4,100. That's over $120 lower than where the index is now. Moving on to Meta, doing something absolutely predictable from a technical perspective. It busted out. I tell you what, this red upper trend line, not really there. We haven't really confirmed with Meta to be in an uptrend. You'd want to be making higher sets of highs. We didn't really confirm that with our latest two kind of peaks. The stock, it's actually making in a very, very shorter term, making lower sets of highs. Now, in the more intermediate term, you are still kind of at least basing out, if not making higher sets of lows here. With Meta, I would expect this one to pull back to the bottom of the range if you want to trade Meta. Look, no matter what you want with Meta, it can be a buying opportunity south of about 160. So you are on the doorsteps with Meta of buying this one. Probably from a shorter term trade perspective, I'll probably take a shot at that one at 160. Now, over to Apple. It looks like to me with Apple, we're probably making another lower set of highs, although the lower sets of highs is not a very steep decline with this one. I think we've topped out on this one from a technical perspective. We talked about how on last week's show, like, what is it really going to take for this one to go back to all-time highs? All-time highs are just $7 to $10 higher than where the stock is right now. I would expect this one to pull back. With Apple, there is an area here at 157. I like this one. You can plus or minus a couple dollars on this one. Certainly if you're buying these stocks for the 5, 10, 15 year, I wouldn't necessarily try to buy these ones on the penny. As you approach 160 on this one, I think you can buy. I wouldn't necessarily be aggressive. I wouldn't unload my entire account at this level, but this is an area where I buy. Lower than that, you've got an area here at 150. Where we'd be extremely aggressive with Apple is if we get a complete reversal in these markets, I'd be very aggressive down here at about 135. Moving on to Amazon. We talked about for several weeks after Amazon made that kind of gap up after earnings that it was highly likely that this stock would stall out in this 140 to 150 range. That appears to be what is happening with Amazon. If you get a deeper pullback, there is a gap between 132 and 124. I would expect if the momentum stays, we probably retest this level down here at about 123, 124 on Amazon. There's levels right in there. If you don't have a position in Amazon, you like this one, that would be the first area. We obviously have this larger green box down here, about $100 per share. Another area where we like Amazon on the pullback. Moving on to Netflix. This one also, we talked about how it reached, I have this hard red line here. This is where we gap down. There's also some level of support. You go all the way back to like 2018. Even before that on Netflix, there is some support for this stock at about 250. We assumed that this stock was going to meet some resistance here at 250. If you reverse course, on Netflix, you have an area here where you have kind of an upper trend line that I have drawn in here. Not sure if that's 100% accurate. I'm anticipating Netflix pulling back. There's an area of support here at about 199.200. That could be more psychological since it's kind of a round number. That would be an area where you could step in on Netflix. Further down, you've got an area probably, if it materializes very quickly, kind of in that 190.200. I think 190 to 200, if you like Netflix, could be an area for it, that one. Moving over to Nvidia, we've identified it now. I think this stock is going to go sideways. Certainly next week with quote unquote earnings with Nvidia. Obviously they pre-announced, so we pretty much know what to expect with this stock. I think we're going sideways with this stock in terms of the chip sector and the outlook over the next 12 to 18 months. I think investors are getting a little comfortable with the fact that margins are probably going to come in, demand's going to come in. I think we pull back again on Nvidia, and I think you could retest these areas south of 160. South of 160 is a buying opportunity, I think, for Nvidia, not necessarily an aggressive buying opportunity. Now, probably the one stock that is setting up so perfectly from a technical perspective is Google. Looks very much like Meta as well, but we're making more clear higher sets of lows here, higher sets of highs. Now, it's not perfect, but it's pretty close. It appears we got to the top up here at Google. If you wanted to sell the stock, this is where you sold it earlier this week at 120. It perfectly and from a technical pattern perspective. Again, a lot of people say, well, technical analysis, I don't believe in it, and that's okay. Look, you make those decisions yourself as an investor, but this is a very predictable pattern. You could show this to a 4-year-old and they would tell you, look, when it comes down here, it goes up. When it comes up here, it goes down. That's exactly what technical analysis is. And so we'd expect with Google, you could come back down here. There's an area at 112 I like. Further down, 110. The stock should find some support here. If it doesn't, that's okay. We should have some support down here at 107. Maybe retest the lows down here at 105. I like Google from that perspective. Moving over to Microsoft, looks a little bit like Apple, a little more steep on this downward trend. It looks like to me we just created another lower set of high with this one. We're probably going to pull back on this one. There is a level of support here. I have represented by a red line here at about $280 per share. I mean, we're at 285 on Microsoft. Wouldn't necessarily be aggressive here because if you slice through this 280 level, you have a high probability of coming back into kind of the 260, we'll call it 250 to 260 consolidation area down here. This is where I would like to accumulate Microsoft shares. Finally, Tesla. This one's hanging out. There were some highs with Tesla back in the January region of 2021. It broke down, broke back up, but there's a magnet for Tesla stock right at about $890 to $900. So two things could happen with Tesla. It could stall out right here, and then we head lower. If you head lower on Tesla, there's buying opportunities. I would say south of about 760 on this one would be where I would be interested in buying it. Now, the opposite could happen. We could stall out here. The sellers could just dry up and this one could move higher, but then we should reach some resistance at the kind of a lower set of highs trend line. This one, again, we've been calling for this one to potentially top out at 1,000. The momentum just quite frankly might not get it there, but if you have momentum in the markets next week or a news story that pops Tesla to a certain degree, you could pop up to 1,000. In my opinion, that's a selling opportunity more than a buying opportunity. You wait for these bigger pullbacks as this stock, obviously not breaking any news, very volatile. You get bigger pullbacks. Again, south of 760 on this one would be the spot I'd be looking to buy Tesla. Guys, hopefully you have a wonderful weekend out there. Be safe, and we'll see you again next week. That was the FAANG Stock Recap Show for Friday, August 19th. We'll see you again soon. Good luck with your investments.